What's going on, guys? Alex here, and today I'm providing an update to the Paycheck Protection Program that just came out basically a half an hour ago, and that has to do with the fact that Shake Shack, which received $10 million of a loan under the Paycheck Protection Program, has committed to returning that loan. Kind of unexpected, fascinating. Let's explore this and let's see what this is all about. Now, just to back up a little bit, what I'm talking about is the Paycheck Protection Program, which was passed as part of the CARES Act. That was the big stimulus package that was enacted to help small businesses get back on track because of this whole coronavirus thing. Now, there was a bunch of controversy because big companies, relatively, I guess they still qualify as small businesses given the rules that were put forth, but they don't seem small. They don't feel small because Shake Shack has thousands of employees, millions of dollars in revenue, and business owners were making the case that, hey, there's a lot smaller businesses that could have benefited from this thing. And the fact that such a big company got $10 million in terms of a loan is, some would say, unfair. But all that aside, what they have decided to do, apparently, is give back the $10 million loan that they received under the program. Kind of unexpected. All right, so let's take a look at an article here. This is in NBC News. It says Shake Shack returning $10 million government loan meant for small businesses. I got to say, this is surprising given the fact that Shake Shack received $10 million. Then there was Ruth's Chris Steakhouse that received $20 million because they applied under two different divisions. And there was a lot of fervor that was raised about that. And here we go. One of the big guys is already giving it back. Question is, what is Ruth's Chris going to do? I guess we have yet to find out. Should be interesting. So it says, with the Paycheck Protection Program already out of money, the hipster burger chain says other restaurants need its loan more than it does. So is this a goodwill gesture? Is this something done out of the goodness of their heart? Let's read on. All right. So it says that Shake Shack, one of several large restaurant chains that got federal loans through the coronavirus stimulus law meant to help small businesses, said Sunday night that it is giving all $10 million back. It's interesting that's happening on Sunday night, but we'll get back to that. The New York hipster chain is among more than a dozen companies with annual revenues in the hundreds of millions that are reported to have received money from the Paycheck Protection Program. The loan program set aside $349 billion in the stimulus law known as the CARES Act. Less than 2 weeks after it started, the program was already out of money. And throughout this time, a lot of business owners went, whoa, I didn't even know about this program, the fact that I could apply for it, and now the funds are already exhausted, and they're hearing about the fact that pretty big companies got some pretty big loans. So raise some questions. In a statement Sunday night on LinkedIn, Danny Meyer, Shake Shack's founder and CEO of its parent company, Union Square Hospitality Group, and Randy Garutti, Shake Shack CEO, said that the company pursued the loan because the law stipulated that it was open to any restaurant location with no more than 500 employees, which describes Shake Shack's 189 individual U.S. restaurants. They say the Paycheck Protection Program came with no user manual and it was extremely confusing. And the program offered to forgive the loans if recipients rehired, furloughed, and laid off employees by June. And because Shake Shack and its parent company had already furloughed hundreds of employees, they said that they gambled that the best chance of keeping our teams working off the unemployment line and hiring back our furloughed and laid off employees would be to apply, and now things would be clarified in time, and hope that things would be clarified in time. So they're kind of making the case that, hey, we didn't really know what was going on. We applied for this because it was available. We got it, and now we don't really need it. Okay. Let's take a look at the actual statement that they released on LinkedIn. And again, they're releasing this on Sunday night, which almost guarantees that it's going to be picked up in the news throughout the entire week, right? Because when companies want to put forth news and make sure that it's covered, they generally do it either on the weeknights, except for Friday night, or right at Sunday night, so it gets picked up through the whole week. If they really wanted to bury this, they would have released something Friday night typically. So when companies want press releases buried and no one to see them, they do it on Friday nights. This was done on Sunday night, so you know that they want this out there as much as possible. But let's take a look at what they have to say. On March 27th, when both branches of Congress and the White House came to an agreement to provide sweeping financial assistance via the $2.2 trillion CARES Act, many of us in the restaurant industry cheered with a big sigh of relief. This pandemic and the consequential shutdown of an entire industry that relies upon the gathering of people at a moment when people cannot gather had already shown that no restaurant is unsinkable. With slim margins in our industry to begin with, restaurants of all sizes and flavors were vulnerable and laying off people by the hundreds. Indeed, Shake Shack and Union Square Hospitality Group needed to make these tough decisions too, furloughing or laying off hundreds of team members throughout our respective companies. One, a publicly traded company, the other, an independent restaurant group. Okay, so let's kind of dig in and skip some of the fluff here. And it says that the program was for restaurant chains with no more than 500 employees per location, which it's difficult to think of a restaurant chain that has more than 500 employees per location. At least I can't offhand. So it says for Union Square Hospitality Group, the decision as to whether or not to apply for PPP loans was more complicated. All USHG restaurants closed as of March 13th, and with no revenue, the company was forced to lay off over 2,000 employees. Since the Paycheck Protection Program loans would be forgivable only if employees were hired back by June, and since most USHG restaurants are based in New York City, where that timeline is unlikely achievable for full-service restaurants, that application decision relied upon our conviction that one day we would be able to pay back the loan. After careful consideration, USHG opted to apply for PPP loans, taking on the risk in order to hire back laid-off employees as soon as possible. So we also have to remember that these PPP loans, the idea is that the interest rate is going to be 1%, and the payoff can be up to, I believe it was 30 years on the paycheck protection side. Let's see, we did a spreadsheet on this not too long ago. Let's see if we can pull that up. What are the payment terms? Okay, so that paycheck protection program was actually changed to 2 years. The EIDL was up to 30. This is 2 years. But still, if you're having 1% on that loan, it's not bad. And plus, if you use it for particular purposes, a good portion of that loan, if not the whole thing, may be forgiven. So that could be $10 million free dollars that they're receiving in the form of essentially what amounts to a grant. So let's keep reading. Shake Shack was fortunate last Friday to be able to access the additional capital we needed to ensure our long-term stability through an equity transition in the public markets. Equity transaction in the public markets. So it sounds like they just went out and said, hey, we need money. We're raising it under these terms, and they received it. We're thankful for that, and we've decided to immediately return the entire $10 million PPP loan we received last week to the SBA so that these restaurants who need it most can get it now. And they're making a few recommendations, too. They're saying, hey, there are a few changes that you can possibly make to this program that will make it better. It says that we urge Congress to ensure that all restaurants, no matter their size, have equal ability to get back on their feet and hire back their teams. We're an industry of 660,000 restaurants with nearly 16 million employees. While it is heartening to see that additional $310 billion in PPP funding is about to be approved in order to work for restaurants, this time we need to do better. First of all, they're saying that it should be funded adequately. It's inexcusable to leave restaurants out because no one told them to get in line by the time funding dried up. That unfairly pits restaurants against restaurants. This industry rises and falls together, and there is a concern that once again the government will not have allocated adequate funding, then send businesses to the front of the PPP line, which have more limited access to outside funding. All right, so they're saying that you need to prioritize the funds a little bit better so that it gets to where it needs to be. Okay. Assign to each applying restaurant a local bank that will be responsible for executing the loan, assuming the restaurant has satisfied eligibility requirements. Too many restaurants have been left out of the program simply because they lacked a pre-existing banking or loan relationship. I covered this in another video, and it's clear that the big banks are favoring the clients who owe them money and using this CARES Act as more of a bank bailout than anything else during this coronavirus situation. Finally, their third recommendation here is eliminate the arbitrary June forgiveness date for PPP loans. This virus has moved in waves with a different timeline in different parts of our country. Instead, make all PPP loans forgivable if an adequate number of employees are rehired by a minimum 6 months following the date that a restaurant, state, or city has permitted a full reopening to the public. So what's happening now is there was a stipulation within the CARES Act that the amounts that can be forgiven are tied to that a certain June date. Now, June is getting a lot closer very quickly. So what they're saying here is that to make this program really count, you need to extend that date for which forgiveness would be applicable. Overall, pretty surprising that they've decided to give this money back. Didn't quite see this coming. But you also have to understand why they would do this, okay? And I think there are three possible explanations, because you have to play devil's advocate here. You also have to put yourself inside the boardroom at these companies and try to take yourself through their thought process. Now, the one out of three alternatives is that they're doing this out of the genuine kindness and goodness of their hearts, all right? Because they're such do-gooders that they felt, we need to do this as a favor to all these other restaurants that we work with, because they really need the funding. We don't need the funding that much. And we're just such saints that we are putting this $10 million out there for other restaurants, their competitors, to use. I don't buy that explanation. So let's move to the second one. The second explanation is that they're looking at this as a tremendous marketing opportunity. Okay, first thing on Monday is that every news outlet that covers the PPP, that covers business, that covers stock market, what have you, they are going to cover this. And they're going to put Shake Shack's name right in the headline of every single publication. And you have to ask yourself, how much is that worth? Could you even buy that if you were buying advertising? So one of the decisions, and some people might think this is a disgusting way of looking at it, but if you're an executive at this company, the decision process you're working with is, overall, what's the exposure worth that we're going to get for giving back this $10 million? Is it worth $5 million? Is it worth $10 million? Is it worth $15 million? Because if the amount of exposure that you get, the amount of goodwill that you build, the amount that Shake Shack has mentioned now in conversations regarding the PPP program is altogether worth more than $10 million, then this is hitting it out of the park. This is an absolute beautiful decision, a tremendous piece of marketing skill, because ultimately they're giving back $10 million. They're getting back 15 million, 20 million, what have you, of goodwill and free advertising and all of that this is a win. And you have to look at it that in terms of taking the loan and having $10 million available in extra capital, that is a win for shareholders. But giving it back and getting back even more on top of that in terms of goodwill and advertising, that's beautiful artistry right there. So you could tell that at least the marketing department was not fired at Shake Shack. It's in full force, even if they're phoning it in from their socially distanced home work environment. Beautiful. If that's the case, I got to hand it to them. This is marketing artistry, and I'm pretty impressed if that's the case. The other possibility is that this is the beginning of what I like to call as the scattering of the cockroaches. Now, they're big cockroaches, but they're cockroaches nonetheless. And what it might be is that these companies, these big companies, anticipate a backlash. They feel that on the horizon, there's going to be some bad news bears coming their way when people catch on to the fact that such big companies were given these loans and didn't give them back. And it might be interesting if more companies like Ruth's Chris and some of these others that receive these large loans follow along in Shake Shack's footsteps and give back those loans as well, because they don't want the backlash that's going to come on the back end when everybody pieces this together. Because a really bad outcome would be that once everybody returns to normal life, whatever that might look like, and start going back to restaurants, that Shake Shack is going to be targeted, Ruth's Chris is going to be targeted to some kind of boycott on some level, and they may have even further economic harm by the negative goodwill that was generated by keeping these loans. So this may be the scattering of the cockroaches. It'd be interesting to see how this plays out in the next few months, and if the other big businesses are going to follow along. Because if you're Ruth's Chris now, you're not looking so good, because your partner in crime, so to speak, backed out. And now you're stuck all by yourself with the negative publicity that's going to come out of taking $20 million loan when arguably you may not need it as much as some other businesses. So those are 3 possibilities that I could come up with. If you guys have other ideas, feel free to throw them in the comments below. But those are the 3 alternatives, being they're just kind and good-hearted, and they really want to help their competitors make it through this tough time. I don't buy that, because if every other restaurant closes down, Shake Shack looks that much better. They do that much more business. So I don't really see that as being the primary reason here, even though they may want you to think that. Second is whether this is a marketing opportunity. It's very easy to imagine a situation where they get more than $10 million of marketing, of name mentioning, of goodwill, of being at the top of mind of people that think, hey, I'm hungry. Why don't I go to Shake Shack? So there's, I think, definitely a possibility that they saw this as a great return on investment in terms of taking the $10 million, giving it back, and we look like the heroes. Finally, I think that there might be some possibility of a backlash once all this is over. There was backlash back in 2008 against the bankers and all of this. You had all this Occupy Wall Street protesting that happened after it became known that the bailout basically went to the rich and the wealthy. So maybe some element of scattering of those cockroaches. So I'm thinking 2 and 3 might be a mix of those a little bit. 1, I'm not too crazy about, but let me know what you think, okay? This has just come out, this news that they're giving this back, and it'll be interesting to see if their competitors follow suit. And with that, hopefully this was helpful. If you have any questions regarding PPP or EIDL or any of this good stuff, drop a comment. I'll try to answer that as best as I can. Now, on the positive front, it does look like Congress is working on an additional package to expand the funding for PPP and EIDL and so forth, so that may be forthcoming. But I even question if these programs are able to handle money coming back, right? Because PPP has already run out of funds, so businesses have already been denied. Now $10 million comes back. Are they equipped to even handle that? Because now they're going to have to reach out to those same businesses that were denied and tell them, oh, well, you weren't really denied. Here's the money. It's kind of strange, because if their applications are already closed, this $10 million could very well sit at the SBA for a long time before they figure out how to deal with it, right? Because if they've already sent out the denials, business owners have already made decisions based on those denials. So are you now going to call them back and say, oh, we were just kidding, here's your loan? Not really a good look. It would have been better if they didn't take the loan and the other businesses had access to it. If they understood enough about the program to apply for it, they probably understood enough about the program to also see that as a possible outcome. So those are my thoughts. Let me know what you think in the comments below.